In today's video, we're going to be going over Bitcoin to the US dollar. I'll take a look at the current price action that we're having in our move from nearly $29,000 down here up past $45,000 where we've currently seen, and I'll let you know my thoughts on where the price of Bitcoin is headed next. Do I think we've had a bottom from this bear market that we've had since the middle of April here, or do I think there's more downside to come? And in either situation, what are my price targets? We'll get into all of that and more. Now, real quick before we get started, if you like this content and want to see more similar content, do me a favor, do yourself a favor, and click that like and subscribe buttons below. This helps support me a ton and I really appreciate it. So let's dive right into this. I have the entire price history of Bitcoin open right now from when it first launched on Coinbase in the late 2014. Now, the only thing I currently have on my chart right now are a couple numbers, as you can see, and if you've never heard of Elliott Wave Theory, then this probably doesn't make any sense to you right now. I will be going over what these numbers mean and how they help predict the future price of Bitcoin, but for now, I'm actually going to dive into our more current price action. I will be diving into these numbers and how they help predict the future price of Bitcoin, but for now, let's start way simpler. Let's just use support and resistance lines. Now, support and resistance lines are just basically spots in price history where the price has tested multiple times to either the upside or the downside. In a sense, they're just areas with high amounts of buyers and sellers, and we can see that based on strong rejections at these price levels. So for example, the first very obvious one you see when looking from left to right on this chart is the first peak we had in 2017, our first super strong bull market that took us to almost $20,000 on Bitcoin. Now, right at the top of this, you can see the price rejected it very strongly and came all the way back down below $3,000 later on. So this is clearly a strong support and resistance line, and I'm going to go ahead and draw that one in first. Now, one of the things you'll first see here, and one of the reasons I love these support and resistance lines on my chart, is the first time that we came back to this support and resistance line. So I drew it based off of this pivot back here because when we came up to it, we rejected, so there must be a bunch of people who want to sell at this spot, hence the support and resistance line. It resisted here, and we'd expect the same to happen in the future. When we get back to that spot, there are still tons of people who want to sell at that area. Now, oftentimes when you break through all of the sellers, price starts to move pretty dramatically upwards. So as you can see, more than 3 years later, in December of 2020 into here, price came back and tested that exact same blue line in there. Almost to the penny, we had the same exact high put in. Now, we didn't bounce downwards as strongly off of it this time, clearly, since we only went down to about $17,500 in here, or maybe if you count it from this pivot a little bit earlier, which is just a few $100s off from that resistance, we dropped into the low $16,000 price range, but obviously not back down below $3,000. Either way, you can see we definitely rejected this same area, and when we did finally push through it, we had super strong volume, as you can see down here. If I hover my mouse, it is these couple of candles right here. So a strong volume push through this resistance right here, and that started our major run upwards all the way to the highs that we saw recently, over $64,000. So that gives you a good idea of how significant and how simple these support and resistance lines actually can be. And honestly, you could trade just off of the support and resistance lines and be a successful trader. In fact, this is almost exactly what I do when I'm trading options. But for the sake of long-term investing in crypto, long-term buying Bitcoin to hold it for multiple months, multiple years, however long you want to hold it for, that's when we'll have to dive into something more complex, which we'll get to next. For now, let's add a few more of these support and resistance lines. They're going to help us shape the market and understand where price is going to reject and where price is going to support. So I'll go through these a bit quicker now. All I'm going to do is hover over some of the key spots where I've seen rejections or supports in the past and see if it's happened multiple times. So this one right into here in our mid 2019 run back up to around $14,000. If I just hover my mouse here, you can see it's actually significant both to the left all the way over here and to the right all the way through here. So if I draw that line, and I'm going to draw it back here so that you can more clearly see all of the spots it's significant, you can see what I mean. Once we push through it back here, and I'll zoom in a little bit so you can see, we tried to fall below this line on this first drop down, but price supported into there before going back up to a resistance. Again, tried to fall back down below it, but only a wick was able to close below it on the daily chart here. And then finally, we did end up breaking through that support and resistance line, but clearly significant through here. obviously significant here where we were basing our drawing from. And then same thing here. We kind of hovered around this resistance for a while before actually breaking through it. So now let's add a few more onto our chart. I see a very clear one somewhere in this area, down in this bottom right here, along with our bottoms that we've recently had. Now you could probably draw quite a few of them into here because there's been quite a few different bottoms that are very close in price. I'll just take this one down here, around $29,500, because it supports all these wicks pretty well as all these that are close enough to it. I see the next one up into here, so this peak around $42,000 that we came into here, we resisted it again, trying to push through it here and through here again. I see our next one up in this range around $47,000, where we support and resisted a bunch through this zone, through here as well, and then fell through it strongly. Another one to the upside right around here, around $51,300. Again, so many points of support and resistance all through this area. And then through that, I see all the way up here, and we could probably add a few more into these highs up here, but I don't see anything super significant right now, other than, of course, the all-time high that we have up here. So if we just zoom back out, I think this is a good way to shape the market. Essentially, we can expect that if price comes down to one of these support lines, so if they are below the current price action, that it's going to be tough to break below those zones. And if we do, we can basically expect price to head to that next support line. Now, in this case, there's a pretty large gap here of about $10,000. So those who are bearish are wanting to see a break of this price action to fall much further. And same thing to the upside. Once we break through one of these resistance lines to the upside, so we just recently broke through this $41,500 level, we can pretty much expect to come up to this next one at some point in time, as long as we don't lose price action, lose volume, and head below this one again. So in the short term, I wouldn't be surprised if Bitcoin gets back to this $46,900 resistance level, as it's already broken pretty strongly through this previous one. But as I mentioned earlier, there's a much better way of predicting long-term movement, as these are basically just predicting the next short-term movement that will happen. Once we break through one resistance, we'll likely head towards the next one. And if we resist off of it, we'll probably come back down to that one that we resisted off of. And if we continue, get to the next support, and so on. But now, long-term movement. In my opinion, the only way and the best way to predict long-term movement in the market is with something called Elliott Wave Theory. Now, this theory is definitely complex. It's not meant for beginners, and honestly, as I said before, you don't need to learn this theory. However, if you do want to make solid long-term predictions in the market, I would recommend you learn this. And if you do want to, I have a 10-part playlist on Elliott Wave Theory that you can go over yourself. It's over 2 hours of content, which helps you understand just how complex this theory actually is. But with that being said, I'm going to give you a 30-second summary of Elliott Wave Theory. Elliott Wave Theory basically states that the market trends in these waves of 5. 1, 2, 3, 4, 5. And inside of that 5-wave structure, the 2 and the 4 are counter trend. So this is all going upwards, but these are pullbacks or retracements or counter trend moves. And then once this 5-wave structure actually ends, we get some sort of A, B, C downwards. It looks something like this, with the direction being downwards, and the B in this one is actually counter trend, so it's back in that upwards direction. Now, once this 8-wave structure actually finishes, it essentially just repeats itself over and over on larger degrees, and it's also repeated on smaller degrees inside of it as well. And what I mean by that is once you have this 8-wave structure, it essentially just forms yet another 1 for the first 5 waves here, and then a 2 for the ABC, and then it continues upwards and upwards. So you get another 3, another 4, another 5, and then that all forms another structure inside of it, and so on. And as I said, this first initial 1 wave also has a 5-wave structure inside of it, just like this one did. So that's the basic premise behind Elliott Wave Theory. There are, of course, many rules and guidelines that we must follow to actually satisfy counting these waves. And that's the part I can't quite get into. So go check out that playlist if you want to learn all about that. So on a macro level, what I see right now is that I think this is some sort of 1-2 right here for Bitcoin. We have this large move up from price essentially being at $0 to $20,000, and then a huge retracement back down to that $3,000 level, as I was saying earlier. I think this is some sort of 1-2 on a larger degree, and we're looking for this gray 3-4-5 to finish at some point in the future. Now inside of that gray third wave, there's another 5-wave structure that makes it up, just like the 1 wave. So it needs to be 5 waves to make up that third wave. Now I think from our 2 lows down here, it's actually pretty easy to count 5 waves to the peak. We get 1, 2, 3, 4, and 5. The major question that comes here is this actually the third wave, or is this just another 1 wave, a 2 wave following it? And so all of this would just be the 1, 2 of the gray third wave right here. So 1, 2, 3, 4, 5 to make up that gray third wave. And honestly, at this point in time, it's hard to know whether this is the gray third wave or it's just the 1 wave of the gray third wave. There are a couple different ways we can kind of dive in and figure out, is this just the 1 wave or is it the third wave? We can use Fibonacci retracements, we can use parallel channels, we can use Fibonacci extensions. I won't go into too much detail on all of that because as I've already done this analysis, I actually don't have a super high conviction of which one it actually is. However, I have a personal bias being towards that this is just the 1, 2 right now. So that would mean that all this forms the yellow 1. This is going to be our yellow 2. We're going to form the yellow 3, 4, 5. And then once that yellow 5 is in, that would be the completion of our gray third wave. After that, we'd have the gray fourth wave that pulls back and the gray fifth that goes upwards even further. So you can see with this theory, I'm extremely bullish on Bitcoin long term. In fact, this 1, 2, 1, 2 setup, where we have the 1, 2 in gray, 1, 2 in yellow, is one of the most bullish setups you can possibly see. So now the key question, and maybe the reason you're here, is what does the current price action look like? Is this yellow 2 wave actually in? Should I be buying Bitcoin for the future right now, headed towards $100,000 plus, or is there still more downside? So let's go ahead and dive right into that. So I've zoomed in my chart now to the 2-hour time frame. This is that 5th wave in green peak that we were talking about, and we're looking for this yellow 2 wave. Is it already in somewhere, or is it going to come down further? Now before I get into this, one more quick reminder, slam that subscribe button below for me, please. I really appreciate it. It helps support me a ton. So one of the things we're looking for in the 2 wave is that we need to form some sort of ABC structure downwards, as I was talking about earlier. Inside of that A wave, there needs to either be a 5-wave or 3-wave subdivision, 3 waves inside of the B, and then a 5-wave subdivision inside of the C wave. Now, most clearly to me, when I open this chart, is that it actually looks like a 5-wave structure from our peaks here. In other words, it looks something like this, where we have 1, 2, a really strong third wave, as we typically see in third waves. So third waves are the most extended waves most of the time, and the strongest pushing ones. This would be our 4th wave into here, and then this could be our 5th wave bottom all the way into here. I'm going to turn down the degree on this because it needs to be a significantly lower degree. I'll change the color because we already have one in yellow here, so let's change it over to blue. And this is the most obvious standing thing that I see right now, is that this is a 5-wave structure. Now, as I said, we need to actually form an ABC downwards for our correction to be finished and for this 2 wave to actually be in. And so a 5-wave structure cannot be the entire correction. I think this is likely just the A wave of our correction, and now we're working on that B to put in the C wave later on. Let me take the wave off of this so you can clearly see where those labels are lining up. And I'll turn the degree one higher than that 5-wave structure into here. And this is the best picture I have on Bitcoin as of right now. I think we have this 5-wave structure to make up this A wave. We're working on this B wave structure, and then we'll finally get a C wave with one more push downwards to finish our yellow 2, which will be the most prime opportunity to buy Bitcoin that we've potentially ever seen. But we're not done quite yet. Let's actually figure out, when is that B wave going to top, and then what's the C wave going to look like, and does it all actually make sense? So one of the first things I want to do is validate this 5-wave structure. The first one is that the 2 wave should be a significant Fibonacci retracement between the 50 and the 61.8%. And let me show you what that actually means. Let's assume we have some sort of price action that looks something like that, and then we retrace downwards afterwards. We can use our Fibonacci Retracement tool here and click at the bottom of our move here and then the top of our move, and then I pull this sideways just so we can see where that actually comes down to. Now, if the retracement came perfectly to this red line right here, which I have labeled as 0.5, it would be a halfway pullback or a 50% retracement of this entire move right here. So it's essentially the midpoint from our bottom to our top into here. we typically see that two waves fall somewhere in this zone right here, between that 0.5 and that 0.65 that I have here, which would be a 65% retracement. So let's actually measure out our two wave into here. I'll use the Fibonacci retracement from our top to our bottom into here and just pull that sideways. And you can see we come a little bit past that prime zone, which would be somewhere between this red and gold line right here. We don't perfectly hold it, however, it's pretty close, and it's not uncommon for a two wave to come as deep in retracement as this blue 786 right into here. Of course, as I said, this is the prime zone, but oftentimes we do come a bit above or even a bit below somewhere into this range. So overall, it's not picture perfect, but it's still pretty good. It's definitely valid. Let's move on. One of the key rules is that in a 5-wave structure like this, the third wave cannot be the shortest wave. And to do this, we used our trend-based Fib Extension tool. This basically measures the relative move of waves to each other. So I'll show you what that means. Let's click at the top of our one wave right here and the bottom of our one wave. Now we've got the price of our one wave held onto by our mouse into here. So wherever I click from, it's going to measure relative to the length of this one wave. So I'm going to click at the top of my two wave right here, and again, pull it sideways just so we can see onto the chart. Now if price came down to this pink line right here, it would basically mean that this price action right here is exactly the same as the price action from where we clicked our third click to that pink line. They'd be exactly equal. That's exactly what this tool means, is that it's the 1.0 or 100% the length of the one wave. Now in Elliott Wave Theory, the most common spot for a third wave is between this yellow 1.618 and this green 1.75. And you can see that we actually nailed this zone perfectly right in the middle of it with our third wave right into here. So this is a textbook third wave into here. We also get an extreme amount of volume at the bottom of our third wave, which we also really like to see. So overall, this third wave looks really good and really strong. Next up, we have our fourth wave, and we'll go back to our Fibonacci retracement for this. We tend to see fourth waves fall between the 38.2 and 50% retracement of our third wave. So we'll click at the top of our two up here and the bottom of our third down here, and again, pull it sideways, and you can see, as I said, this is the prime zone in Elliott Wave Theory for the fourth wave to fall. We just barely wick inside of that perfect zone. So the fourth wave is exactly ideal into here. That's definitely valid as well. One of the other things we notice is that it doesn't overlap with this one wave into here. If it did, it would be an entirely new structure called a diagonal. I won't get too into it right now. So last up, let's validate our fifth wave. There's a couple different ways to do this. One of the key ways is to measure the length of the 1 relative to the 5, and oftentimes they're equal in value. So let's grab the length of our 1 with our trend-based Fib Extension tool, click at the top of our fifth wave right here, the start of our fifth wave, and pull it sideways. And this 1.0 would have been our target for that fifth wave. The second most common spot is this 0.618 I have here, and you can see we've actually just barely wicked below it, and it looks like that blue support line we had earlier is kind of the reason that we didn't go too much further down to our 1.0 target. It's a really strong support zone, and as I said earlier, if we fall through that zone, we're likely to fall another $10,000 downwards. So it's not too surprising that the 618 and the blue line here form a little bit of a confluence box into here where it caught the bottom of this price action. One last thing we can do is actually try to put a parallel channel onto this. So I'll grab my parallel channel tool and I'll click at the top of my 2 and the top of my 4 into here and pull that downwards. And then you can either channel from the bottom of the third wave right here or from the bottom of the 1 wave. It depends on how steep the movement is, how strong your third wave is, but I like to try both of them. So if I hover my mouse here, you can see this parallel channel isn't really too significant. We don't even make it to the midline here of the parallel channel on our fifth wave downwards. However, if I click at the bottom of our 1 wave right into here, and I'm hovering my mouse there to line up the parallel channel, you can see our fifth wave actually comes perfectly to the midline of this parallel channel. This gray dotted line that I have in the middle is exactly where our fifth wave falls into. So we've got the 0.618 of the length of the 1, we've got that huge support zone that we had drawn from earlier on, we've got the midline of our parallel channel. It's not too crazy to say that our short-term bottom from this move right here ends right here with the 5-wave structure. So with that valid, how does that leave us right now? Well, basically inside of this B wave, we need to have a 3-wave structure. And I think that it's in progress right now and likely already complete, actually. I see a three-wave structure forming that looks something like this, A, B, C. Let's of course turn down the degree on that one, and let's change the color to keep it from being confusing. And it's very possible that we're forming something like this right now that could reverse very, very soon. Now, actually, one of the counterpoint arguments to this being an ABC is how strong this C wave actually is. In an ABC, we expect the extension values to be somewhere around 1 to 1.272. In other words, if I grab the length of the A here and click at the bottom of our B, we expect that C wave to kind of fall between this 1.272 and 1.414 zone. And as soon as we get kind of past this 1.618, it does look more like a 1, 2, 3 instead of an ABC. So while I think this is probably the best structure right now that we can count, with this 5-wave from the bottom and ABC into here, and then expecting one more push downwards into something like this, there's not a ton of certainty because of how strong this C wave currently is. But for now, I will leave this as my best count. I do think it's the strongest count moving forward, and especially if we start to downturn and we break below these lows into here around $37,000, then I believe this count will definitely be in play and will be headed down towards that next support line, likely around $20,000. On the other hand, you always need to be prepared for being wrong. So if the price were to come down a little bit somewhere into here and then put in one more high in just like that, I think we'd need to rethink quite a bit of this count, because that would look more like a 1, 2, 3, 4, 5-wave structure off of our bottom, in which case we would have to be headed upwards once again, because we can't have a 5-wave structure upwards just like that to be the end of our upwards movement. So I know that doesn't give you a ton of conviction. I do believe this is the best count for now, but we'll have to see how the price action actually plays out over the next couple of days to get a better idea of where Bitcoin is going to be headed. So with all that being said, if you're not currently holding Bitcoin, if you're not in any trades right now, I can't recommend you enter into this zone. If you're looking for a long position, I would wait for this 5-wave structure to play out. Don't let the FOMO get to you when we come back downwards and then head back up maybe towards $51,000. Because if that is the case, if we do have this 1, 2, 3, 4, 5, just remember that afterwards we're still going to get that A, B, C downwards. And you don't want to be the one buying at the top of that 5th wave. You should buy at the bottom of this C wave into here instead. And if you're in a long position into Bitcoin right now, I would be cautious of us breaking below some of these support and resistance zones into here on the smaller time frame, somewhere around $37,000. If we lose that level, I do believe we're going to head down and break this strong support zone around $29,000 that we've been hovering at for a while. And just real quick, if we do zoom back out into this, and let's just play off the premise that I believe it's a 1, 2 on a larger degree right here, and either way we would put this Fibonacci retracement on. So let's pull it from the bottom of our gray 2 into here to the top up here. This is basically the main reason I believe that it's a 1, 2, is because we've already come so deep in retracement, and as I said, the 2 wave likes to fall between this yellow and red line into here. And it's not uncommon for the price to come all the way down to this blue line into here. So overall, this is why I believe it's a 1, 2, and this is also giving me some idea that I think we could head down quite a bit further, maybe down to that $20,000 level that I was talking about earlier, which would be the bottom of our bear market. This is still my prediction for now. Of course, this could easily change if price continues upwards much stronger. I would expect us to resist very, very soon into here if this is the count that's going to play out. So with all that being said, I hope you learned something. I know there's not an immediate trade to take, but I hope this gives you a general idea of where I think the market is actually going to be headed. For now, I'm not going to change any of my positions. I'm still holding a bunch of Bitcoin long term, and I'm not planning on changing that anytime in the short term right now, but I might end up selling if we break below these price levels into here and buying back at a lower price target to accumulate more Bitcoin. And as of a long position, I'm not planning to add to my long position unless we get close to this $20,000 level that I've been targeting for quite a while now. So with all that being said, thank you so much for watching. If you like this content, if you want YouTube suggesting more similar content to this one, click that subscribe button, hit the like buttons below. This helps me out a ton. I really appreciate your support, and it's all I ask is one simple click down below. So thank you so much for watching, and as always, good luck trading.